Good morning and welcome to the Killik Co market update. Markets have crept higher this week, and an important technical point is that we are no longer in a bear market. A bear market is when markets are down by 20% or more. Let's have a look at the MSCI World Index. Here's the chart for the last 12 months, and you can see that we hit a high of 1874 back in February. Then we had that really significant fall in the market as we hit the peak level of coronavirus fear, and you can see that the index came all the way down to 1251, and that was actually a 35% fall from the record high that we had hit in February, so really a huge fall there for the market. However, since then, markets have actually had quite a significant bounce, as you can see by the chart. At the moment, we're at 1517, and that means that we're just over 19% below the record high, and that means that we are no longer in a bear market. We're now starting to get some bits of data for the first quarter, which can really help to give us a feel for the impact of the coronavirus lockdown on the wider economy. One of the most highly anticipated bits of data is Chinese economic output for the first quarter, which came out this morning. Now, Chinese economic output or growth is really important for the wider economy. Even if you don't have any Chinese companies or Chinese funds in your portfolio, it's very likely that any British or American companies that you have will be dependent on China for some proportion of their revenue. For example, some of the FTSE 100 big mining companies depend on China for over 50% of their revenues. So this Chinese growth number that came out this morning was really very highly anticipated. The number came in at minus 6.8%, meaning that the Chinese economic output for the first quarter of 2020 was 6.8% lower than the corresponding number for the first quarter of 2019. And this is far below the levels of growth that we've come to expect from China. Here's a chart showing the levels of quarterly growth that we've had over the last 10 years, and you can see that the numbers have consistently been above 6%. So this number of minus 6.8% for this quarter is a very negative headline indeed. Granted, it's not too surprising, bearing in mind that the country has been on lockdown for the last few weeks. So what we're really looking for now is evidence of how quickly the Chinese economy is starting to return to normal. So what we're looking for now is data on things like Chinese factory output and also commentary from international companies to give us an idea of the kind of demand that these companies are starting to see return in China. Corporate reporting season began this week, so we've been looking closely at company commentary to get a feel for exactly how badly these companies have been impacted by the coronavirus lockdown measures, and also to get a feel for anything these companies may have been able to do to protect themselves, and finally to get a feel for any sorts of guidance these companies may have put in place for the future. So let's have a look at some noteworthy companies that have reported this week. First up, JP Morgan, one of the major US banks. Mixed results here. On the one hand, they've experienced quite a big increase in trading volumes because markets have been so volatile, but on the other hand, they've had to dramatically increase the amount of money they've set aside to cover any bad loans they may have made to companies or individuals who can no longer afford to repay. And this increase in bad loan provisions was quite a big theme we saw across the whole banking sector, and that is bad news for banking profits. Next up, we had results from Rio Tinto, the major mining company. These were quite encouraging. The company said they've seen an increase in demand for steel from China, and that suggests that the Chinese economy is starting to pick up activity once again. We also had results out from Abbott Laboratory, the major healthcare company. These results were quite good because the company has become quite heavily involved in making testing kits for the coronavirus. And finally, Johnson & Johnson, another major healthcare company. Quite mixed results here. On the one hand, the company is quite heavily involved in developing medical devices, and that department's seen quite a big slowdown in sales because so many routine medical procedures and operations have been postponed because hospitals are so busy dealing with coronavirus patients. On the other hand, Johnson & Johnson has done quite well in its consumer healthcare division because so many people have been stockpiling things like paracetamol. Next week, we've got lots more companies reporting. We're particularly looking forward to PayPal and Amazon. We're quite keen to hear how those companies have done because so many people are staying at home and assumedly ordering more things and paying for more things online. We've also got results out from Delta Airlines and from Boeing, so we're quite keen to see how badly those companies have suffered, bearing in mind the global lockdown on air travel. That's it from us. Have a great weekend, and we'll see you next Friday.